Whoa, Wall Street just had an absolutely record-shattering day. So let's break down exactly what happened, why it happened, and most importantly, what it all means for you.
First up, just take a look at this. The S&P 500, one of the best measures of the whole market, just rocketed to a new all-time high. It closed at a stunning 7,126.
And it wasn't just the S&P. The Dow Jones shot up by nearly 870 points. I mean, that is a huge surge, and it just goes to show how widespread today's optimism really was.
So let's be clear, this wasn't just a good day. It was a truly historic day for the stock market, blowing past previous records. So the big question is, what on earth could spark such a powerful move?
Well, the answer actually lies halfway across the world. It all came down to a single piece of geopolitical news that honestly changed everything. This headline from the Associated Press really says it all. Iran reopened the Strait of Hormuz. This was the one catalyst that just lit a fire under the market. But you might be asking, why is this one waterway so incredibly important?
Okay, so think of the Strait of Hormuz as one of the most critical arteries for the entire planet's energy supply. For the last 6 weeks, it's been closed, putting a total stranglehold on global energy. So it's reopening, yeah, that's a massive deal.
And as you can imagine, news this big sent powerful shockwaves through every single corner of the financial markets. So let's trace that chain reaction it set off.
The impact was immediate and dramatic. The second traders believed that oil could start flowing freely again, bam, prices just cratered. West Texas Intermediate, which is the U.S. benchmark, plunged over 11%.
And this right here is the absolute key. For months, the market has been terrified of runaway inflation, mostly driven by high energy prices. Cheaper oil means potential relief, not just at the gas pump, but for the prices of pretty much everything we buy. It was a collective sigh of relief.
And you could see that relief in the bond market, too. The yield on the 10-year Treasury note, which is basically the interest rate the government pays, well, it fell to a one-month low. And what that really signals is that big money investors are suddenly way less worried about long-term inflation.
You know, today's massive rally was really the exclamation point on what was already an incredibly strong week for stocks. I mean, just look at these numbers. The tech-heavy Nasdaq gained a whopping 6.8% in just 5 days. The good feeling had been building, and today's news was the final push over the top.
And this slide illustrates the story perfectly. The news created very clear winners and very clear losers. Companies that rely heavily on fuel, like airlines and cruise lines, they soared. But on the flip side, the big oil companies, which, let's face it, profit from high prices, they took a pretty big hit. It's a perfect snapshot of this huge economic shift.
But we all know that stock prices aren't just about economic data, right? They're driven by human emotion. And this week, we saw a stunningly fast turnaround in market psychology.
So to track this feeling, we can use something called the Fear and Greed Index. It's a really handy tool that bundles together a bunch of different market indicators to give us a simple reading on one question. Are investors feeling fearful, or are they getting greedy?
And just look at this journey over 5 short days. At the start of the week, the market was clearly in a state of fear. By Wednesday, it had already tipped over into greed, and from there, it just kept accelerating.
Which brings us to today's close, a reading of 68. There's no ambiguity here, folks. Greed is now the dominant emotion driving this market.
So, with the mood shifting so dramatically, what does this all mean for you? How should a smart investor react when the market suddenly starts running hot with greed?
Well, the experts at Raymond James offer some really powerful, timeless advice. They remind us that for long-term success, it's not about chasing these emotional swings, it's about having a disciplined plan and sticking with it. So what does that discipline framework really look like? It's actually pretty simple. You focus on a company's fundamentals, not the hype. You avoid making trades based on emotion. You maintain a long-term view. And you make sure your investments are allocated strategically. That's how you navigate any market, whether it's driven by fear or by greed.
And that leaves us with the million-dollar question, doesn't it? The good news on oil is real, but so is this sudden surge in greed. Is this the beginning of a sustainable new leg up for the market, or is this just a sentiment-fueled trap? That is what every single investor will be watching next.